Welcome back, everyone. I'm Rob Booker, and in today's lesson, I'm going to share with you Knoxville Divergence. I'm going to show you how to plot it on your charts by hand or using the indicators that it's built from, and then in the next few lessons, I'm going to give you this indicator for free and show you how to put it in your Metatrader platform. We'll start by going over to the Metatrader platform, and we've got our price on the screen up here, we've got our momentum indicator in the middle, and we've got our relative strength index with our overbought and oversold levels down below. What we want to do here is we want to combine these indicators. Oftentimes people will say that one indicator can tell you something interesting, but only if a second indicator backs that up or confirms it do we want to make a trading decision. All right, I'm going to pull up the sketch tool, and Nate, we're going to zoom into this area right here.
All right, let's adjust that a second there. And zoom in, zoom in, zoom in, zoom in. And cranking, cranking, cranking. Should be good.
All right. So now we're in this area right here on the chart, and we can see that price is traveling upward. We can see that momentum over the same period of time is dropping. And inside of this same zone, the relative strength index reached above the 70 mark, or went into overbought territory. Those three things together, price rising, momentum falling, and the relative strength index overbought, is what I call Knoxville Divergence, or KD for short. There's another Knoxville Divergence on this chart only a few moments later. I'm going to remove everything from the chart. I'm going to draw a new one. In this area right here, price is rising. It's higher here than it was here. Momentum is falling. And the relative strength index was overbought. That's another place where three things line up. Price rising, momentum falling, the relative strength index is overbought. There's probably another area right on this chart, and I haven't identified it just quite yet. But why don't we just put an indicator on our chart to show us this automatically so we don't have to do all of this stuff? Well, that's exactly what we're going to do right now.
Okay, let me readjust.
All right. So we're going to readjust the focus so you can see this pretty nicely.
Okay.
And we're going to click Insert, Indicators, Custom. Now it's going to be down here at the bottom, Nate, which might be hard to see.
Zoom out a little bit.
Okay. And we're going to choose Knoxville Divergence 3.5. I'm going to get you a copy of this indicator for free. Knoxville Divergence pops up a box with all of our values, colors, everything else. I'm going to click on Colors. And you can see it's all red and green. Red and green, red and green, red and green. Well, that's perfectly fine. I don't want to change anything. We can draw on the chart later. You can change it as you like. And we're going to click OK. And boom, all of a sudden, all of the lines that show the places where these indicators lined up appear automatically on the chart, even if our indicators are not on the chart. I can remove these indicators down here completely and free up all of this chart space. And my Knoxville Divergence lines will show me where the market was divergent. Now, I'm sure you might have some questions, but before we move on to those questions, what I want to show you is an example of bullish Knoxville Divergence. We just saw places where price was so high that it was ready to fall. Here's a place where price has dropped and it's ready to rise. Nate, what we'd like to do is zoom in this area on our chart. I'll pull up the sketch window so we can draw on that area, and you just let me know when we're ready. Okay, in this area, price is dropping, the momentum is rising, and the relative strength index has gone oversold. It's an early indication, not a guarantee, but it's an indication that price is perhaps going to travel upward in the near future. We would call this bullish Knoxville Divergence. We would say bullish because a bull market goes up, And if it's about to fall, we would call it bearish. Next, what I'm going to do is simplify everything by removing unnecessary garbage from our charts. I'm going to go to Charts, Charts, Indicators, and I'm going to delete the momentum indicator and delete the relative strength index, and I'm going to adjust the Knoxville Divergence indicator. I'm going to change all the lines to white, so they're easier to see as we talk about them right now. It'll take me just one moment to do that. And almost done. I changed one to lavender. Almost had the whole thing right. Now I click Close. Now we can go full screen, Nate, and I'm going to zoom in here so we can see these lines when they appear. And we're going to move around on the charts, and we're going to show a bunch of different places where divergence may have existed. Ah, right here. So you could just use the main one, Nate. We're going to, yeah, all the way up. Oh, okay. So in this chart right here, you can see that price is falling and that we have lines underneath the bars or candles. That's bullish Knoxville divergence. It's a suggestion that price could rise in the near future. You'll notice a couple of things that go along with this. The divergences happen here, and there's actually multiple places where a line was drawn. You can have multiple places where a Knoxville divergence line is drawn, and it may take several times before this signal pays off. It's fine. It doesn't have to be right every single time. It doesn't need to be right every single time. But there's an example of where we saw bullish divergence, suggesting that price is in the near future going to go up. Not a guarantee, just a suggestion. If we keep scrolling, we might find a bearish Knoxville divergence. This is a suggestion, not a guarantee, but a suggestion that price is going to go down. We call that bearish Knoxville divergence, or KD for short. You can look at Knoxville divergence on the 4-hour, 1-hour, daily, weekly, any time frame chart you like. You can go to super short-term time frames, look for bullish Knoxville divergences, or look for bearish Knoxville divergences. Sometimes when you change back and forth amongst your charts, what will end up happening is a bunch of weird lines will show up on your charts, arrows or lines in outer space. What you do in this case is just switch to a different time frame and then back again to the one you really wanted, and those weird lines will disappear. It's just a little quirk in the Metatrader platform, and sometimes I like to make it do it just so I can show you exactly what's going on. See, there's that line again, and if that happens, you simply change the time frame chart from one and then back again, and those lines will typically go away. Here's an example of where we had bullish Knoxville divergence and a move went up, and bearish Knoxville divergence and the move went slightly down. Sometimes you'll see multiple Knoxville divergence lines in a row as price is falling, or multiple Knoxville divergences in a row as price is rising. Later on, we could talk about simple trading systems to avoid signals that are bad and take the ones that are good. But I want to finish off this lesson with a very, very important disclaimer. With your Knoxville divergence indicator, there will come arrows. These are called reversal arrows, or you will also hear the word reversal tabs. The first time I built this indicator, they were displayed as tabs, not arrows. Reversal arrows or tabs are an element of Knoxville divergence. They're inside the code, and you will see them on your charts. They are, in some instances, a really nice place to execute the Knoxville divergence trade. You get the Knoxville divergence here, the arrow here, and that denotes a buy trade. Or you get the Knoxville divergence here, the arrow there, and that means you could execute a sell trade. There's a longer description about reversal arrows and tabs, and we can get to that in a later lesson. But for now, you can mostly ignore these reversal arrows and tabs, not worry about them, and simply play around with the Knoxville Divergence indicator. What I'd like to do is get the Knoxville Divergence indicator onto your charts in your hands. So in the next lesson, I'm going to show you how to do that, where to go, what to do in order to get Knoxville Divergence, load it into your charts, so you can start playing around with it. We want to thank Forest Park FX, our sponsor. If you're interested in FX trading, contact Forest Park FX to open up a trading account and get cashback rebates on every trade you place. You can go to forestparkfx.com. Forex trading carries a significant risk of loss. Terms and conditions will apply. We'll see you in the next one.